Welcome back, or a warm welcome to those of you joining us for the first time to our Ardenwood Presents 6-month webinar series called The Timeless Impact of Planned Blessings, Legacy Planning for short. Why this focus? Because without good estate planning, a considerable portion of our estate will go to the government instead of to our loved ones and the charities and causes of our choice. Good estate planning is intentional, intelligent, effective, and loving. I'm John Mitchell, and I serve as Executive Director and CEO of Ardenwood here in San Francisco, where we're finally beginning to break out of our typical summer weather, which is cool and foggy, back into warm sunshine. Thank you. Thank you for joining us today. Let me just say that you are invaluable to Ardenwood. As you know, Ardenwood is a 501c3 charitable nonprofit organization. Our goal is to provide you with the best possible care, as well as informative and inspiring events like this one. In return, your donations help sustain our services, which have been uninterrupted since 1930. You enable us to be our best, and we thank you. You know, we've received some really nice feedback from these webinars, so we're so grateful they're meeting a need. Christian Scientists are wise. They make responsible, informed, personal decisions. They pray for guidance, and they develop a plan with confidence and joy. We've all experienced unexpected circumstances in our lives, ones that encourage us to be better prepared and that force us to grow. We hope that through today's seminar and those to follow each month through December, along with Q&A opportunities, will answer many of your questions and inspire more. Finally, the content shared today is only informational and is not intended to be legal advice. A replay of this presentation will be available on our website tomorrow morning. And now, let me reintroduce Jim Maher. Jim is a certified senior advisor and a broker consultant specializing in Medicare. He has been helping individuals and companies navigate Medicare since 1989. Jim is also a certified long-term care insurance strategist, what we'll be addressing today. Jim and his wife of 35 years, Teddy, live in Lincoln, California, just north of Sacramento, with their spoiled rat terriers. I love that, Jim. Jim has talked to well over 1,000 Christian Scientists since we had our first webinar last October, answering innumerable questions about Medicare, long-term care insurance, and estate planning. He's been a tremendous blessing to our field. And from what he's told me, he's loved meeting and working with all of you. So thank you for that. Before we begin, let me explain how you can ask questions today. If you look at the bottom of your Zoom screen, you'll see an icon that says Q&A. Click on it, and a screen will appear where you can type in a question. Press submit, and it will arrive here. We will collect them and save them for the end of the presentation, and most likely, because of today's content, they'll be saved for Thursday's Q&A session. We are the only ones that see your questions. Please join me now in welcoming Jim Maher. Jim?
Welcome, everybody. Thank you, John. Jim Maher, Rick Bailey is also on the presentation with me, and I'm really thankful that Rick is. John told a little about myself. I am a certified senior advisor. This is my 33rd year in the business helping individuals and companies with Medicare planning, long-term care planning. I'm so old that when I started this, they used to call it nursing home, and now that's like a bad word. Nobody says nursing home planning anymore, but I'm passionate about helping people, and I'm very passionate about helping Christian Scientists. As a Christian myself, Katie, Rick, and myself are all Christians, and my goal is I'm not going to stop until I can help all Christian Scientists understand which programs are going to be best for them and not the insurance companies or the brokers that sold them a product, but I want to educate them, and I'm learning so much. John and Amy and Leslie and everybody at Arden1 is just, they're so awesome, and Nancy too, and explaining to me how I further understand Christian Scientists, and I'm just committed to try and help you. So I'm going to go on here, but today I thought I'd do something different. I'm going to have Rick join in too. Rick's got expertise not only in financial planning, but he's also an expert in life insurance and options, how we can maybe use some life insurance to help with long-term care planning. And I know next month we're really going to go into more examples, but we kind of want to witch or whistle with that today. So let me go right through this. Today we're going to talk about protecting your most important asset. And you know what that is? It's your family. Right? I've been talking to people about long-term care again since the late 80s. And I always say it's not about you, it's about your family, right? So today's agenda, real simple. We're going to talk about the consequences of not having a plan and for long-term care, not on you, but on those you love. Specifically developing a plan to mitigate, I always say mitigate healthcare exposures or expenses in retirement. And lastly, what will pay for that plan? Most scientists I've talked to, and I've talked to hundreds of you nationwide. I mean, I've even had calls from Germany and Canada. I guess that's outside the United States, but that's good too. But you're incredible savers. Not only has God blessed you with health, but a lot of you have incredible wealth. And I'm not talking about $1 billion and mansions and everything. You're incredible savers. You don't spend a lot of money. You take care of people. You help your church. And it's a pleasure. So I want to show you maybe some options today. If you do need to use those monies for care, maybe there's a better way to do it. And I know Rick will have some good ideas on that too. I found this out for sure. As a Christian Scientist, you expect a long life experience. I've talked to many in your 80s and 90s, and it's just incredible how strong you are, going strong. But we need to plan now. This next slide, Rick talked about last month, and it's really important, right, Rick, on financial planning and some of the goals. And I'll kind of let Rick take over on this one.
Yeah, I think planning is the key, and planning based on your goals. If you want the perfect plan, I'll show you mine, because it's based off of me. It's based off of my goals and what I want for my family. But anytime we're doing planning, we've got to go back and look at your situation, at what goals you want to achieve. And long-term care is one of those goals that we have to make sure gets covered, because it's going to affect everything you do now and into the future. So I think we've talked about this before, but nobody plans a future as being in a care facility. When you plan your retirement, it's you're on a beach, you're golfing, you're with your family. We always plan for being healthy and happy. But what happens to your family when these situations occur? And how is your family going to be ready for that?
That's right. Those are great points, Rick. So I always tell people, look at long-term care. This is so true. It's not a place or a condition, although you receive care, right, in different facilities possibly, but it's a life-changing event. It's not only life-changing for you, but for your loved ones that are going to take care of you. They take care of you out of love, even though you may not want an adult child doing it. That's what they're going to do. And we're going to talk about that in a minute. But what is long-term care? People always ask me, well, Jim, how do you tell what is, all these activities of daily living? So I thought about it for a long time. When you're working, like when Rick and myself, we're still working, and if you have disability insurance, it says, listen, it's easy to tell if you're disabled because I can no longer perform the substantial duties of my occupation, right? So there's something to measure that. Well, guess what? When you're retired, you're not working. So the insurance companies, when they created these activities of daily living, they did it so that you can access your benefits. So if you've got some type of a policy, whether it's a traditional long-term care policy, an asset-based policy, a life insurance policy with a long-term care rider, essentially This is how you get your money from the insurance company. They talk about when you can no longer perform some of the activities of daily living, and they talk about 6 of them. And I'm going to do them in the order that you get up. I think that's the easiest. So when you get up in the morning, you transfer, right? That's a fancy way of saying I get out of bed, or I get out of a chair, or whatever I'm sleeping in. So if I need some type of assistance, either standby assistance from somebody in the house, or help from somebody actually physically helping me out of bed, that counts as I need help with transferring. Next, we go into the bathroom, right? And we use the bathroom. And if you need help either with hygiene or issues like that in the bathroom, or toileting, that would be another activity of daily living. After that, most of us, hopefully we shower or bathe, right? So that would be the 3rd activity, followed by getting dressed. And it's interesting because if you've got issues doing that, I'm going to talk about my father quite a bit. My father passed away at 102, but he was a strong guy, and he never really needed much help until he was like about 99 or 100. But when my father was 101, he really started having issues with dressing, right? Something simple with he had arthritis in his hands. So that would be another activity of daily living if he needed some type of assistance dressing. Eating, right? If you need some type of assistance with that, that would be another activity. Continence, maintaining control of your bowel and bladder all day. That's important. Or you have some type of cognitive impairment. So that's how insurance companies look and say, listen, if you can't do 2 of 6 of those activities, or you have a severe type of cognitive impairment, whether dementia, Alzheimer's, something like that, and if you have a policy, you can actually, they call them trigger the benefits, where you can start actually receiving the monies from that. What's really important that a lot of scientists need to understand too is that Medicare does not cover you for long-term care, custodial type care, help with what we just went over. They'll cover you. So for example, with Christian Scientists, if you're in Ardenwood, for example, either under Part A of Medicare as an inpatient or for skilled care, Medicare covers you for skilled care for a short period of time. But after that, for any type of custodial type care, it stops. So it's important you understand that. It's just not. In activities of daily living that we talked about, custodial type care, Medicare will not cover you for that. It does not. And it's so important. The only reason I go over that is because I get calls, honestly, almost every week from adult children asking me how they're going to take care of their mom or dad. If they're in a facility, what monies do they use? What about that Medicare, Medi-Cal, Medicaid thing? They don't understand it. So it's so important that you understand it. So now I'm just going to talk briefly about long-term care insurance and what it really does. To me, it's all about it provides an income stream for your family to use for your care. That's what it really does. Most people have money set aside that they're living on, and it's so important to understand that, you know what, you're still going to have expenses no matter what. You're still going to have your monthly expenses, but if you have some type of insurance you can turn to that turns on an income stream, it makes your life, not your life, but your spouses and your adult children's lives so much easier. And these policies now, they're new and innovative, and we're going to talk about that in a few more slides here. But it can cover you when you stay at home, right? Most people want to stay at home. Rick, I don't know anybody that says, gee, come on, I'd like to go to that nursing facility and get all my care there for my rest of life. But that just doesn't happen. People want to stay at home. The problem is staying at home gets expensive. It's not cheap. We're going to talk about the cost based in San Francisco for home care, and it's scary how expensive it is. So again, these policies would generate enough income to come out so that you can use the monies. On this slide here, I use a fancy insurance word called indemnity plans. People go, what the heck is that? Well, that means it pays you cash. These plans are excellent for Christian Scientists because you can do whatever you want with the monies. Once you've got the benefits, if you want to stay in Ardenwood, for example, or at Chestnut Hill or any Rinky, right? You can do that with these plans because it's a cash benefit and you can do whatever you want to do with the monies, whether it's stay there, whether it's help a grandchild with college, pay your next door neighbor to mow your lawn, whatever you want to do, these plans are awesome because they pay you. So many of you I've talked to nationwide, and again, you've got, I see Genworth, or even in California, CalPERS, and some of the major insurance companies, and they're a reimbursement type policy. That means you have to incur the expense at a licensed facility. The key is a licensed facility, and then must be reimbursed by the insurance company. These indemnity plans, and my favorite, I'm even going to mention a name here, is Nationwide. They have an excellent plan for Christian Scientists, and they're very Christian Scientist friendly, as far as we know. So, and these policies will help you pay for, I call them the instrumental activities of daily living. My mother-in-law right now is my wife, and my sister-in-law are taking care of her right now. Her financial planner didn't do a very good job, and she actually dropped her long-term care policy. They thought that would have been a good thing to do, so she didn't have to pay on it. So, because she was never going to use it, right? Until she turned 82. Now, my wife and my sister-in-law are providing care, but my mother-in-law needs help with the basic activities of daily living, but also homemaker services. She really can't cook. We can't trust her to turn the oven on, right? Because she forgets. She needs a ride to go to the doctor. She needs help with laundry, cleaning, things like that. These policies will allow you to pay for these services also. So it's so important that people understand that there is help out there. We just have to know where to go look for it. This, I think, is really important because, Rick, I've seen this so many times in my life where we're going to talk about how providing care disrupts families, but providing care to chronically ill people often makes healthy caregivers chronically ill. I've seen at least 100 examples. I had a very good client, one of my best friend's mom down in San Jose, and she got her second marriage. This guy was a lineman for the utility company, big guy, probably 6'4", 230 pounds, very big. He had a massive stroke. Well, their promise to each other was, listen, we're going to take care of each other no matter what. We're not going to put you in a nursing home. So they spent all his money getting a bed, you know, the hospital bed in the front room. She was the around-the-clock caregiver. Well, Fran had suffered from some cancer, and unfortunately, all this stress, her cancer came back, right? Because that's all she was concentrating, was worried about. Rick, I know you've probably seen several examples like this too.
Yeah, it's one of those. I've actually lived that one with my grandparents. My grandfather had dementia, and my grandmother, back in those days, you know, it was, you know, a little bit of a stigma if you had dementia. So she was providing 24/7 care, trying to hide it from everybody, and actually worked herself to death. I mean, that's what the doctors had said is, you know, she, you know, was working 24/7 at her age, and it caused her to pass away. So I think it's one where it's hard to imagine, you know, providing that kind of care unless you've given it, you know, and been involved. And, you know, it's just having a break. My mother-in-law was taking care of her husband, and, you know, it's one we finally stepped in to just any chance we could give her a break, just so that she could have a little bit of time to herself to go just get away from it, mentally and physically.
Yeah. It's amazing what it does to take care of someone you love. I mean, I did a long distance for two of my parents. I'm up here in Sacramento and they're in San Jose. So it'd be about a 140-mile trip one way. So I would go down on every Saturday and take care of my mom, who was 88 at the time, and my dad was like a young 97 at that time. But it just wipes you out, right? I mean, that's just what you do. You know, you do it out of love for them. And I think that was my parents' plan. Well, Jimmy will come and take care of us. Well, that's, you can only do that so long until you just, it causes so much stress and issues with the family. So I've seen this too. Even, you know, I used to get resentful myself, and I would pray and say, please don't let me be resentful. And my sister would lived, you know, basically about a mile from my parents, and she wouldn't do anything. So it used to drive me crazy. You know, I would have to be the long distance caregiver, and it causes friction. And Rick, you've seen that. I mean, we've got numerous examples of families where it really tears the adult children apart. Probably not so much in the Christian Scientist community, but in the non-scientist community, believe it or not, a lot of adult children are thinking that money we're spending on mom and dad, I think that was supposed to be my inheritance. So.
Yeah, and I think a lot of it is guilt too. Those that are providing the care, you know, are doing it, and those that are not able to or aren't there providing the care, I think the guilt starts coming in.
Yes.
I've had friends that have relocated to take care of parents, and believe it or not, those that didn't relocate were the ones that were bitter about it.
Yeah.
Because
right.
I think it's you just don't know what it's going to do.
Right. And I would say this slide I just like, and I put this together, put simply, if you ever need care for a period of time, your life is not going to end, right? It doesn't end, but guess what? Someone else's lifestyle is going to end. I see that again right now with my wife and my sister-in-law taking care of my mother-in-law. I mean, they're both work full time, and yet they're constantly worried about who's taking care of mom. What is she doing? Does she need to be bathed? Do we need to shop? Do we need to cook and clean? Things like that. So it really does put someone else's lifestyle is going to end. This next slide kind of talks about the circle of care, which I think is really interesting. So the person who is receiving care, and most men out there, you need to pay attention to this, because we all think, if I talk to Rick and John and myself, we probably think, well, it's never going to happen to us. We don't have to worry about it. But when it does, I go, well, I don't really want my wife or my adult children to take care of me. I don't need that help. But you know who does? They do. They become the primary caregiver because they do it out of love. Their adult children want to help. They change their lives, your grandchildren's lives, to do whatever they can to provide care for you. Because like my dad figured, hey, I was their, you know, that was their caregiver, so that was their plan. It wasn't a great plan, so, but you do it out of love. The secondary caregiver is more like, I would say, myself and my brother-in-law now at my mother-in-law's house, where we're going over, whether you're cutting the lawn, whether you're repairing a fence, whether you're repairing something that she accidentally broke, right? So we're going there, taking her to lunch. We took over and we'll watch a baseball game with her, trying to help out some way. So we may be a secondary caregiver. And finally, you look at the other circle of care, her support group, her friends. One of their friends actually picks her up and still brings her to church on Sunday, which is awesome. Most people don't do that. They go out of their way. So that's kind of your circle of care built in right there. So again, it's not about you, it's about the people you impact and making sure you have a plan to help them. I always say there's 3 questions when I talk about if and when you need care. First off, where do you want to receive care? Like Rick, nobody wants to say, gee, my first choice is I think I want to go into a nursing home or a nursing facility, right? We all want to stay home. That's where we want to be, in our own homes. That's what we're comfortable with. But then you have to ask yourself, who's going to provide care, right? Well, if I'm looking at my spouse right now, she would be probably first in line. I have 3 adult boys and they would want to help too. But this is more important. Who's going to pay for it? You know, I set money aside for retirement. Fortunately, I've done long-term care planning 20 years ago. So long-term care wise, I'm in great shape. But people have to ask themselves, Rick, right? Who's going to pay for it? What monies are you going to use for it? Because it's not cheap, is it?
No, it's not cheap. And it really, the bigger issue is, how do you reallocate that money? Because if that was retirement money, in most cases, there's still a well spouse at home. I still want to pass assets on to my kids. I want to keep giving, you know, my charitable gifts, whatever I've been doing, but now that money has to be retargeted. And if you're in a facility or you need home care, those people are professionals that get paid. And so now that money that was set aside for trips and whatever else has to be repurposed. But
That's exactly right.
and it's the well spouse at home that typically that money's taken away from.
Mhm. That's right. Now we're going to talk about, these are a few numbers, and I pull them from the Genworth. Anybody can go online and check out the Genworth long-term care studies for nursing homes, home care, assisted living. But I pulled these numbers and I use it in the Bay Area, right where John is, down by Ardenwood. It's kind of scary now for a home, just to stay home, the average, you're about $5,500 a month for home care to stay home. And also we inflated it out, and in 2030, it's almost $7,500 a month for home care. Well, that's a lot of money, right? People don't realize how expensive that was. And the reason I didn't put 2040 or 2050 on there, because the numbers were so large, sometimes that scares people, right? And going, that's never going to happen to me. I can't afford that. I'm not going to worry about it. But you can see even assisted living. Here's a thing that's very scary, is nursing home, right? That's normally the last, right, as we progress from home care, want to stay home, maybe we need some help, we go to either residential care, assisted living facility, and finally nursing home. But look how expensive that is, Rick. Right? And like you just said, long-term care costs are an addition. They're an addition to what you're already spending every month on expenses.
Yeah, and I think that when you start looking at those kind of fees, you know, it's hard to imagine, you know, how long that can occur, you know, or go on. And you know, if we're talking dementia and those types of things, that care can go on forever. I mean, my wife's grandmother, I never saw her eat anything that wasn't healthy. And when she got dementia, the doctors, you know, told the family, be prepared for a long term, you know, for this to occur, you know, to be paid.
Right. And what it does to the family, right? They're the ones that are providing care. In that case, it changes their lives. It changes the adult children and the grandchildren's activities and everything because of providing care. So right now, I've talked to a lot of scientists out there, and this is the option you've chosen right now. You're self-funded. So that's the money you're going to use, right, when something happens to a lot of you out there. And that's okay. It's a plan, right? If you've set aside some monies for it, that's at least it's a plan. A lot of you have money in CDs and passbook accounts and mutual funds that are kind of earmarked for care if I need it, right? That's what I hear all the time. It's there if I need it. I think today we want to see if there's a better way to position those monies to not only to take the pressure off you, but your adult children or any family caregivers. Also, you do not want to rely on Medi-Cal or Medicaid. Medi-Cal is in California. That's what we call Medicaid. Nationwide, most states call it Medicaid. That's not really, you don't have many options. I know, John, that they're not able to come down to a religious non-medical healthcare institution like Ardenwood. Medi-Cal does not work well there. The other option is insurance, quite honestly. And Rick, how many people say, gee, I want to go buy a long-term care policy today and I want to pay into a policy for 25 or 30 years, but I hope I never use. It's kind of like paying for more auto insurance or homeowners insurance, right? I've got another cost that I hope I never need it, but if I do, it's there. Most people nowadays go, gee, is that all there is? And the answer is no, it's changed. There's another way to do it, and we're going to talk about that here in a minute. And I want to show you how to transfer the risk to an insurance company by using leverage with monies you already have sitting there earmarked for care. We're going to take advantage of leveraging your money. And that's super important when we talk about insurance. We found some Christian Science-friendly plans, and with Rick's help, we found a couple more out there. We really like the long-term care law, even the insurance policies that have long-term care riders, because you can turn, you know, maybe a ratio of $100 into $300, $1,000 into $3,000, $100 into $3,000 to use for care. And these plans aren't, I always get, oh, I don't want that. My dad had a whole life policy. My father had like 3 of them when he passed away. We bought them in like 1928, 1932 for $1,000 whole life plans from Knights of Columbus and a couple old plans back in Iowa. But these are not like them at all because they have so many more enhancements or riders on there. Living benefits that you can use these policies to your benefit now. When we talk about chronic type conditions, that's what long-term care is for chronic type conditions. And these new policies have those features where you can use the monies for that type of care. Rick, these policies have tax-free death benefit, cash buildup, right? Kind of equity inside your policy building up also.
Yeah, what's nice is they're not a use it or lose it. So it's really, it's not like the old policies where, well, like car insurance. I mean, I look at my car insurance and wish I could pay less because I'm a good driver. It's everybody around me that I'm worried about. But, you know, it's one where, well, I had you know, somebody ran into me about a year ago. Prior to that, I'd paid in for over 20 years and never made a claim on my car insurance.
Wow.
So it's an expense, but you know,
Right.
I can't call up the insurance company and say, can I have my money back?
Right.
With the new
Yeah.
plans, if we don't need it, we get the money back.
That's exactly right. I'm going to show an example in the next couple of slides here. But some of these plans we found, and Rick and myself have been hard at work. It's hard finding insurance companies that are Christian Science friendly. We're managing with Rick's help. We found a couple more out there where they have these indemnity type plans, or once you receive the benefits, you can spend the money wherever you want, right? Whether once you get the money, if you want to stay at an Ardenwood or a Chestnut Hill or wherever you're at, you can do that. I love that because there's no restrictions. The insurance companies aren't saying you have to use it at this licensed facility only. You know, have the opportunity to use those monies however you see fit, right? You can also, we talk about leveraging your money, and the more monies you have, you can also not only turn that 100,000 or 50,000 or whatever amount it is into a multiple of $200,000 to $300,000. If you don't use that for care, let's say, well, guess what? Now you can leave more to your families or your charities, which is so important. Most of the scientists I talk to, I know you want to take care of your family and your church, and that's so important to you. So we just want to show you how you can turn money that's sitting there. We can leverage that and show you with life insurance how you can have a multiple of 2 or 3 times that amount. So, Rick, I don't know if you want to go through this. We're kind of talking about the asset-based long-term care, which I absolutely love. This is kind of nationwide plan, and I think it works incredibly well for Christian Scientists.
Yeah, this is one. So if you think about it, you're going to take the money and over the years working with a lot of my clients, most of my clients will say, I've got this account over here. That's for my long-term care, where, you know, going back into, you know, earlier days, it was a money market account, a CD. But now we're going to take that money, we're going to take it and deposit it with the insurance company, either all at one time or sometimes over time makes sense. But once we move that over there, that $100 or whatever it is, we can get 3, 4, 5 times the benefit for long-term care. And the big part of that is focus on that word tax-free. So it's one, let me use my dad for an example. My dad, you know, he had an annuity, and that annuity wasn't performing like it used to. You know, over time, the interest rate went down on it. Well, we were able to take that annuity and move that over into this long-term care policy that immediately gave him 3 times the benefit. So think about that. If it's 100,000, now you have 300,000 of benefit tax-free.
Yeah.
And so what every dollar can be used for your care. The other nice thing, over time, that benefit can grow. So I was just working with a client that he's 68. We're looking at $100,000 going into his plan. By the time he needs the policy, you know, that benefit, which will probably be around 79, 80, it's actually 500,000 of benefit. So it's gone up 5 times what he's put into it. So you start looking at that leverage of, can I plan better? And why I like that leverage is, remember, this is money that if it's a perfect world, we've allocated that to our fund retirement for our, you know, pass on to our heirs or charities, whoever it is. But what if those things happen? Now we've leveraged that benefit. But of course, in the back of your mind, well, I don't think I'll ever need the benefit.
Right.
So now it's, if you want to, you can cancel the policy and get your money back. Or if you don't use it and you pass away, that's going to pass on to your spouse, your kids, whoever you name as the beneficiary of that, and they get that tax-free. So it's not only leverage to take care of you, but what I like is we don't lose that benefit. It's not just like car insurance where we throw that money out to the insurance company, hoping we never get into an accident. But what if we do?
Yeah.
But there again, if we don't, we get it back. What's that?
That's exactly right. My business partner, who Rick knew for years too, passed away a couple of years ago, and it was suddenly. And his name was Don, and both Don and myself, we took out long-term care policies 20 years ago to be fully paid up. Well, the problem was Don's wasn't fully paid up, and he had a heart attack and passed away in 2 days. And the moral of that story is his wife was like, well, thank God we paid into it all those years, because we never used the policy, right? There wasn't an asset-based plan available back then. If Don would have had an asset-based plan, all the monies he would have paid into that policy would have come back to his beneficiary, his wife in this case, income tax free, all that money. So like Rick said, it's just like auto insurance. You don't want to pay on something. I hope you never use it, but that money's gone forever. Not with asset-based plans. So just a quick recap, right? If you live and need care, you're going to have a lot more coverage because you're leveraging those dollars. If you want to cash in, you can get most or all of your monies back. It depends on the policy and what state you live in. And if you pass away and you don't need care, you get a tax-free death benefit. So important to understand. And I want to talk about Rick. Rick has a lot of experience. I think between us, Rick, we're probably 65 plus years in the industry, somewhere in there, maybe 70, I don't know, something like that. But Rick's got some excellent connections with insurance companies, and he's able to talk to them more about Christian Science-friendly plans. As you know, I've talked to so many companies myself, and it's not easy. Everybody, they don't understand Christian Scientists. They all think it's Tom Cruise or some other crazy thing. They don't understand the religion, and so we try and educate them. And Rick's done a great job finding a couple more friendly, Christian Science-friendly companies that we can use. And one of them, Rick, it's a real simple whole life plan. And I know next month we can maybe show an illustration. I just wanted to let people know that this concept's out there, and it works really well for them.
Yeah, this works good because it's there again. I like that it's guaranteed. You know, we have a lot of guarantees into these policies, so it really is dual purpose when I look at it. There again, we can put the money in. Think about the guarantees. If you have a CD, you know, we know if you put your money in, you're going to get more than that back. It's got a death benefit. If you die and don't need it, your kids, your spouse will get that death benefit. But what I like is we have that money and we have the chronic illness rider. So if you need it for long-term care, now we can accelerate that benefit to take care of you. So when you start looking at this, is we're always looking for ways to leverage the benefit back to you, leverage it if you're healthy, and also leverage it if you need the care. So it really comes back to both, and as we go through and look at, we've got the opportunities with the nationwide long-term care policies. Those are great. Those are indemnity plans. We've got this whole life policy that we're building up cash value. If you need it and want to go take a trip around the world, there's your money.
Right.
You can pull that out and take the trip around the world. You're in control. But if you need it for care, you can pull that money out on the chronic illness rider and use that to cover the care the way you want it paid. So it's there again, it's to keep you in control so that you know exactly what your money's at and what it's being used for.
Right, and with Rick's help, we were running some examples, and I'm not going to show today, but I did some with 60-year-olds and 65-year-olds in California and 70-year-olds. And some of the examples are incredible where you put the money in, you've got almost all of your money guaranteed back in a couple years. The death benefit might have been in, if you put in 100, I can't remember, it was like 220, 240, but it continues to grow and it's guaranteed. So that's a great option for people that say, listen, I need a safe alternative. I don't want to take any risk on my monies. And a lot of these companies we're using, some of this one in particular, it's an A+ company and it's been around 100+ years. So they're financially solvent. And it's just another opportunity for scientists to use these policies to take care of long-term care. Rick, you talked about this annuity, for example, that's out there. And I've run into quite a few scientists across the United States that, believe it or not, have this annuity and didn't know that they could use it, this particular one, for long-term care. Rick, you talked about leveraging your money. Well, I haven't seen any annuity. There's all kinds of annuities, whether you want to use it for income or you want to use it for future savings. This particular annuity is really geared for long-term care. It's an excellent company, and I've done quite a few out there where I've seen, for example, and this, I just used 50,000. You can use 25, you can use 100, you can use 200, it doesn't matter. One example is $100,000 turned into $300,000, 3 times that amount for long-term care. The interesting part about this policy is that you have to be able to answer the health questions, no. And this is a tribute to all your Christian Scientists. You're so incredibly healthy out there. Most of you take hardly any medication. Most of you don't take any medication. And you can answer no to these questions. So most non-scientists, Rick, I've found maybe they can double, maybe they can turn 100 into 200. But when you can turn 100,000 into 300,000 for long-term care by answering some health questions, it's pretty awesome. The return on that, I don't know the percentage, but I know it's off the charts. And what they do is they say, listen, you can use that 300,000 over duration, over 6 or 7 years or whatever the policy is. But it's a way to really leverage that money that's sitting in a CD or a savings account. It's amazing. I've even used there's life insurance policies like Rick said.
What I like too is, this benefit comes out tax-free again. So it's one of those where, and that I bring that up because a lot of people that I talk to, well, I'll use my IRA for my long-term care. Well, if you're using your IRA, and let's for easy numbers say you need to have 100,000 for your care this year. Well, you don't take 100,000 out of your retirement account. You might be taking 150,000 out of your retirement account, pay the taxes, then you'll pay your long-term care bills. So it drains that retirement account a lot faster than expected. Whereas with this, annuity, whether it's the annuity, the long-term care policy, or the life insurance with the long-term care rider, all of those benefits come out tax-free. And it's there again, we're getting the leverage, but I also like the flexibility. What if? What if's a big part of planning, because every time we put a plan in place, we know things will change. Family changes, health changes, your goals may change. So any time that we can build flexibility into our plans, including the long-term care planning, the better the result.
Yes. I would agree. So let's talk about funding, Rick, because people all the time, they ask me, Jim, how do I pay for this without, being flippant saying write a check, right? There's different ways to pay for these policies over a period of a duration. Some of them it really depends. There's plans for everybody out there. There's no real cookie cutter plan, whether people want to pay one time, right? I know some people, when I first started, I had people go, I hate writing checks to the insurance company every year. Is there any way can I just do it one time? And the answer is, well, yes, you can. Some want to pay over 5 years, right? Some want to pay over 10 years, and you can pay monthly over that time frame, over 10 years, have it fully paid up, contractually paid up. Some want to do it over 20 years. It really depends on your age. And if you're young enough, you want to do over a lifetime pay, that's fine. But there's different ways to pay. And when we talk about, what about the assets to use, Rick? I see income, right? Most people, well, I can use my income. This is where I see a majority of people having money for a rainy day. I've got a special CD earmarked for my care and my 2 grandchildren. If I don't use that money, I want those monies to go to them. Well, what if you do need that $100,000, $150,000 CD? What if that does need to be used for care? What happens to your grandchildren or your charity? So we want to talk to them about helping them leverage that money for not only taking care of their health, right, but also taking care of their grandchildren and their charities by using that same money. Insurance policies, Rick, have you seen this out there where the government lets you do a tax-free exchange?
Yeah, life insurance and annuities are some of the exceptions out there. There's several exceptions in the tax code that allow us to transfer one asset to another tax-free. So if you have an old life insurance policy, an old annuity, we can transfer those into these long-term care policies tax-free so that you don't have to recognize any gain, trigger any gains, and pay tax in the transfer. But it's a great way to repurpose what you have. If your goals have changed, can we repurpose what you have to help pay for this new benefit?
That's right.
Just like with my dad, we repurposed an existing annuity that wasn't performing like it should, wasn't really and I went back and talked to my dad, same thing. He said if he had a long-term care situation, he was going to use that annuity. The problem was if we took any money out of that annuity, it would have been taxable. So now we were able to repurpose that, get 3 times the benefit. And now that will take care of all of his long-term care needs.
And the money's coming out that are tax-free, right? There's no longer, you're not going to pay tax on that, right? If you're used for long-term care. I had a client who came in and said, I forget, he had an old whole life policy he'd had for 30-some years. And he goes, well, I'm thinking about cashing this in. He's a farmer. He goes, I don't even know why I have this thing anymore. It's not doing very much. And I said, you know what? We can actually take that policy and transfer it into one of the new asset-based plans. The government allows us to do an exchange, a tax-free exchange, where we can now get more benefit, where we have that long-term care rider. So instead of cashing it in and putting it in the bank and getting 0.025% or something on that, we moved it, we did an exchange into a life insurance policy, more benefit, more cash value. It was a win-win. You just have to be, the real key there is you've got to be healthy enough, right, to qualify to make sure that you can get the policy. So what else? This is just kind of a recap on what we talked about today, on how long-term care situations really impact your family. And it's pretty simple, because if there's no plan in place, right, if you've got money sitting there, guess what? Your family is going to provide care for you. They do it out of love. Your adult children do it out of love. Your grandchildren do it out of love for you. Even though you may not want care, they're going to be the ones that step in and provide it if you haven't done the planning yourself. And they're not shared equally. I see that with my mother-in-law right now. I've got my wife and my sister-in-law. doing everything for my mother-in-law, where my other brother-in-law just sits back and doesn't do anything, but loves to talk about what they're not doing, right? So they're not, responsibilities are not shared equally, and that creates animosity amongst the siblings. It just does. You see, I see that all the time over taking care of mom or dad. Caregivers' lives like mine was disrupted because I want to take care of my parents. I want to take care of my loved ones. And unfortunately, I was their plan. It was me. So don't let that happen to your children. Long-term care often can tear families apart. And it's the sad truth. I've seen, the death of a parent actually brings siblings together, but taking care of a parent causes animosities because a lot of adult children look at the money side, Rick, as to where that's my inheritance I'm spending. I love my mom and dad, but boy, I thought that money was earmarked for me. I see that quite a bit. I don't know if you've run into that at all.
Quite a bit. It's hard when it comes down to money. Instead of focusing on mom and dad, the care they need, what needs to be done. It's their money. It's their, it's your time to take care of them. And all of a sudden the money becomes the issue.
Yes, it does, unfortunately. So this next slide, I used to use the Titanic because don't let this happen to you, right? You Christian Scientists live a long, healthy lifestyle. Don't let this happen to you. I know you're excellent savers, and we want to show you how that maybe you can look at other options to leverage your monies to protect your family, your adult children, siblings. I know some of you have siblings that are going to provide care. So I don't want this to happen to you. Today, what you really need to know, two things. You don't have to remember all this stuff. You can call us, you can email us. I know next month, Rick, we're going to probably talk more about what products, maybe show a few examples of how these policies actually work so that you can really see how effective and impactful they are. Finally, here's our information. Rick's is probably the most important. That's why I put his at the bottom. He has too many initials on there, JD and a master's in accounting, certified financial planner, estate planning specialist. But you can certainly call any of us. Katie and myself, I put our phone numbers on there. So if you have questions or anything like that, we're happy to help. And I know John talked about Thursday, we're going to be back on to probably do a lot of more Q&A. But what do you think, John? I think that's probably how we'll end it today.
Yes, we can do that. We've got just basically two quick questions. We could take those, and then those that will come in later. We can. There's a lot to absorb here. That's what I was thinking. There's a lot to really think about. So we can just take these two questions and then just say those that want to submit them on Thursday, we can address them then. What do you say about that? Okay.
Okay.
So first question is, and you've answered it, which I thought this was great, but I liked the way it was stated, so I'm just going to state it. If Jim does not address in a future slide, could he address the average daily, weekly, monthly costs for the various levels of caregiving, both at home and in a facility? This would allow people with solid planned savings to determine if they could support those costs or would need to provide a supplemental infusion of funds so family is not stressed out. Well, you showed, you gave a good example of really what costs really do look like.
Right. And you know what? There's an excellent website out there. Genworth is used to be a leader in the long-term care industry. I said used to be because now they're not as strong as they once were, and they're having rate increases and having some issues. But they put out an excellent study, John, and people can you can go to your search engine, Google, or whichever one you use, and simply put in the Genworth long-term care study. And the cool thing about that is for example, I can pull up the costs in San Francisco, whether I'm in Des Moines, Iowa, or Austin, Texas, or Miami, Florida. I can look at all the costs for home care. So when you're asking that question, it's an awesome. They have a slide bar where you can look and say, what is it going to cost me now? What's it going to cost in 10 years and 20 years? And that's why the numbers got so large in San Francisco. I kind of, you know, when numbers are so big, you go, it's never going to be $30,000 a month or something like that. That's never going to be that. People just say, I'm not going to deal with it. It's too big of a number. But that Genworth study, they update it every year. I use it. I know Rick's been there, but they have the most current statistics on the cost of care, home care, assisted living, residential care, nursing home care. It's an excellent resource. Again, it's Genworth, 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 and you can just simply Google that.
And it just Genworth long-term care costs.
Yes.
It's excellent. Yes.
Okay.
Yeah.
Awesome.
Good one.
That is so helpful. We can mention that on Thursday's Q&A as well. One other question, and then we'll wrap for today. This comes from a listener. I have long-term insurance with Mutual of Omaha. Do I need to have a doctor's referral to get care paid for under my plan? When I began my plan, I was told that I didn't need a doctor's referral, but more recently, others have told me otherwise. Please advise.
Well, yeah, you have to back up for a second. I know, John, at one time, Mutual of Omaha had some Christian Science-friendly long-term care policies. I'm not sure which one you have, which series, but a lot of them now are the reimbursement kind, where the verbiage is you need a licensed healthcare professional to help you access the benefits, and you must stay in a licensed healthcare facility. And John, we talked about, maybe you can address how Ardenwood is looked at in the insurance world.
It just really depends in terms of, we are accredited through the accreditation system that was set up by the Mother Church many years ago, and that's still continuing today. But for instance, in California, we are not licensed per se. So I know other states are, I believe Missouri, Ohio, but at least at the present time, we're not licensed per se. So it really, we'd have to know and look more deeply into the policy itself to see what really is required. And that's where the fine print comes in. And that's where, Jim, you're so helpful.
Yeah, the fine print really takes away what the big print give it, the fine print take it away. But the nice thing about the indemnity type plans, and I've talked to Rogers there before, and Nancy at Ardenwood is awesome too. She's helped me on in some situations talking about how these indemnity plans, once you have the monies and you're in Ardenwood, you can use the monies for whatever you want. So you can stay in a rinky, right, like Ardenwood. As long as you have the monies, if you've triggered the benefits, you can use those monies for whatever you want. There is no stipulation. That's why they're so important for Christian Scientists to understand the difference between a traditional reimbursement plan and these new indemnity type plans.
Excellent. Well, let's leave it at that.
Okay.
So I just want to thank you, Rick and Jim. And Rick, maybe you can tell us a little bit about your background, just briefly, because I went right to Jim, and then we didn't really hear about your background. So if we could just take 2 minutes on you, because you've got such a tremendous background and bring so much to the picture here.
My background, I've got a bachelor's and master's in accounting and law degree. I practiced for a number of years as a high-end tax and estate planning attorney, and then left the practice and worked for a large insurance company as their advanced planner in the Western US, and also as a regional marketing director. And then finally, after 10 years of doing that, went back out as a consultant. So my background is really helping people put their plan together and focusing on their goals, their situation. Of course, we get into a lot of the tax planning as well, but it's really to get a plan that works for them.
Excellent. Well, again, thank you both. It's a lot to absorb. We'll think about this. We'll have Q&A on Thursday, but we can all come away with good planning is so important and the loving thing to do. And I think everyone can agree that harmony in a family is priceless, absolutely priceless. So
Yes, it is, John.
And thank you all once again for joining us today. We look forward to seeing you again on Thursday afternoon for more Q&A, same time, same Zoom link, and you'll receive another reminder. We hope you'll see you as well next month to address another aspect of legacy planning, life insurance alternatives. It will be on Tuesday, September 14th, with Q&A on that Thursday, September 16th. So thank you all again, and goodbye for now.
Thank you. Bye, everybody.